Builders, slam on the brakes.
Oh, no, go ahead.
As contracts are being canceled. Inflation is taking its toll on the housing sector like we've never seen, and it's getting hit from both ends. Here's what I mean. The simple definition of inflation is too many dollars chasing too few goods. So to get inflation under control, we need fewer dollars and more goods. Dollars down, goods up. That will bring the economy back into balance. So as the Fed works on reducing the dollars in circulation, the supply chain challenges persist. So yes, the dollars are going in the right direction, but the goods are not. And this is causing friction in our economy's recovery. And many of the goods that we're lacking, builders need those goods to build the houses, like wood, glass, concrete, copper, stuff like that. In prior expansions, you would see a correlation between builders' housing completion statistics and housing starts. But for the first time in modern history, housing completions have fallen behind housing starts. That's insane. I guess it kind of fits in with this bizarro world that we're all living in right now, as we've been seeing a lot of firsts. Rent rising faster than sales prices, inflation higher than interest rates, and now housing starts are higher than the completions. And here's why that's so. It has taken too long to build homes from start to finish these past few years. You see, homes that were nearly complete remained incomplete due to a lack of garage doors and windows and appliances, of which puts the number of houses under construction at an all-time high. And I put that in air quotes because there's a lot of houses that are almost done. Like, they ran out of doorknobs, and nobody wants to buy a house where the doors won't lock. We need an increase in goods to finish these builds. To make matters worse for builders, they've got a new challenge because they have contracts on homes from when mortgage rates were low. Now they're not. As a result, when those doorknobs finally come in and the builder can finish the house for the buyer, the interest rates have pushed the monthly payment out of the buyer's reach. So the buyers are canceling their purchase. I mean, it makes sense builders are in no rush to complete construction. This whole mess builders are in was initially just a supply problem, but the skyrocketing mortgage rates have created this money problem too. And to provide some data on the subject, the difference between current completion data and the peak of the housing bubble is over 700,000. We're so far behind in building, like a decade behind. I mean, as you can see here, we experienced a steady uptrend from 2002 to 2005. But in the time period between 2020 and 2022, the total completion data, it hasn't changed much. And to combat inflation, we need to force these houses onto the market. But there are currently 900,000-ish two-unit homes under construction, which is a record high, and that should help a little bit. But the number of housing starts, it still has some room to decline since there is still just too much inventory in the new housing sector for builders to even consider adding more. Continuing to build would completely go against the grain of the builder business model, as when they oversupply a market, they sell their houses for less while their carrying costs rise. That's bad for profits. So when can we hope to see this change? Well, a good rule of thumb for predicting builder behavior is based on a 3-month average supply of new homes. Not to be confused with existing home rules of thumb. Because the new home sector, it works differently. It works like this. 3 months of inventory or less, that's typically good for builders. 4 to 6 months, it's decent for builders. Over 7 months of inventory, and builders can be expected to pull back. And right now, we have 9.2 months of inventory. So no surprise that they've completely stopped. And we probably won't see any significant movement until mortgage rates get back to the 5% area. 7% or more, that's problematic. The good news is this week, mortgage rates dropped almost 50 basis points to get us under 7% for the first time since mid-October. But until we're near 5% mortgage rates again, they've put their tools back on the truck and have headed home to wait out the storm. And this is evident from the builders' confidence data, which has almost completely returned to COVID-19's lows. Now, although multifamily housing permits haven't dropped as dramatically as single-family homes, there's a good chance that they will when rent inflation pulls back. And the real real-time rent data is already starting to show that that's happening. So the loss of both single-family and multifamily building at the same time will result in substantially lower housing permits than we currently have. We want to watch that next year. So is this the end for builders? Well, likely not, as they are in a much better position to deal with this housing recession than at the peak of 2005. You see, in 2005, exotic loans had lifted new home sales so high to the point where the subsequent crash was dramatic. I mean, they saw an 82% decrease in sales from 2005 to when the market finally hit the bottom. And right now, the builders aren't dealing with such an elevated level of sales, so they can work on getting rid of their excess supply with much less stress. And the fact that the builders now have less competition, that's another significant difference. You see, with fewer existing homes for sale on the market, builders will be under even less pressure than they were in 2007 to compete with the lower prices of older existing homes. Now, we'll be getting updated existing home data really soon, but last reported there were 1.25 million units in total inventory. That's a little less than half of where we kind of need to be for a somewhat healthy market. Now, the supply chain will eventually get resolved, and when it does, I think it's safe to say that the market will snap back like a rubber band, of which makes it a very opportune time to look for off-market deals before it does, because you're gonna wanna ride that wave. That's what we do here at Epic, by the way, and if you'd like to get in on that action too, I put a few free resources below in the description that will help you get started. So what'd you notice? What'd you learn? Let me know in the comments. And who else do you know that would like to see this? When their name comes to mind, please share with them. Thanks for watching. I'll see you next time. Take care.